Frank, welcome to the show. It's always a pleasure to see you.
Dan, it's fabulous to see you, and you too, Corey.
All right. I was just looking at your, I think for our listeners' sake, just so they get a better idea of who you are and what you're about, I was looking at your LinkedIn page, and I noticed you've been in banking since 1981.
I know. God, is that ancient history or what?
I know. It's a long time. My wife was saying the other day, she was saying, were the 80s 40 years ago? It's just a weird moment because you know I'm 63, but the time goes by so fast. You still feel like you're in the mentality of being 43 or something. But 81, what was it in 1981 that you did? What got you into banking? Why banking? Why then?
Well, it's interesting. You know, I finished up my MBA at Washington University and had this vision I was going to go to Bain or one of the consulting groups and make $1 billion a year, or Goldman Sachs, and interviewed with all those folks and did well and was invited back. But there was a little banking organization in St. Louis called Mark Twain Banks, and it was hyper entrepreneurial, and they sold it really well. So I joined in there.
Mm-hmm.
And banking at that time was interesting. I mean, my first job, I was the way they did it is the MBAs were attached to a senior executive, and really with the instructions to try to learn his or her job. And I was attached to the chief credit officer. And you may not have this graph in your head, but at that time, prime was 21 and a half. The 30-year note was 15% ish. Short-term T-bills were 18%. And so we weren't making many loans. We were collecting loans, and we were running from project to project to see if we could clean stuff up. So I had the first, year and a half to 2 years was fantastic experience in what can go wrong. All these, developers of residential properties had been sitting there before Paul Volcker woke the markets up, thinking that they had a great deal at 6 or 7% prime. Building houses, selling them, life was good. And then pretty much overnight, it was 21 and a half, and everybody was underwater. So that was, where it began. And of course, we've had, pretty much of a one-way trip for rates since then. There have been volatility, there have been ups and downs, but, getting there to your famous 2006, 7, 8, where it became zero. So that's really what banking was like in the 80s. And we really didn't get into business till the mid to late 80s as the markets kind of cleared and life started to come back together and some of the Reagan policies started to work. So it's an interesting time to get started.
Yeah, trial by fire for year after year for the first, 6, 7, 8 years or so.
Yeah, and just getting in time for the rolling recession in the late 80s and early 90s. Yeah. So we had practice.
Well, you picked the bottom, in bonds to get probably a good time to get in banking. That is very interesting to me. That you had
20%
all these
interest rates. Not what I'm used to, that's for sure.
Yeah.
And when people, when you read in the news that, rates are incredibly high today.
Yeah.
And, they're higher than they were. They're not incredibly high today. Yeah. I remember sitting in an ALCO meeting or two thinking, well, gee, what if prime goes to 30? What if prime goes to 40? And it didn't, thank you. But it's an interesting world. And so over those 40 years, as you said, Dan, we've seen quite a few different environments, had some things that were opportunities turn into the trash heap. And, it's interesting how the world turns.
It sure is, especially those particular 40 odd years, right? Because it was the peak in interest rates, and we've just been through the ringer, it feels like, with crises and, various bear markets and episodes since then, speculative episodes. It's been a real roller coaster. Has it felt like a real roller coaster in banking all that time as the way it has in financial markets? I mean,
I think obviously they interact. So if you're running the bond portfolio, if you're putting the loan portfolio together, sure. Yeah, it's been up, down, and sideways. It's interesting. And regulation, of course, has changed markedly. in that time frame. Back at Mark Twain, we would start a product line or start a new initiative, and maybe 6 months later ring up our friends at the OCC or the Fed and say, "Oh, we're doing this." And of course, it's gotten tighter these days, and regulations and laws are always built to cover the last crisis. It's the Maginot Line all over again. But that's been, the ups and downs in banking have been interesting. But if you stay in sectors that aren't speculative, I don't want to have Jamie Dimon's job trying to put several $1 trillion to work. Thank you very much. I'm hope he does a great job and carries on. But we like to focus on secure markets, things we understand, and not have to put out 50 different verticals or 500 different verticals or 5,000 different verticals that a big bank has to do. But we had the rolling recessions in the late 80s, early 90s. Of course, we had the tech bubble in the late 90s. You accurately predicted the disasters of 2008 and 9, and certainly know about that. And I'll allege we had a depression, except for the Fed monetary easing and policies in that interim period. And now we're kind of
zero rates
back.
sure looks like a depression, doesn't it? I mean,
last I checked.
Yeah. That's kind of a big hint about what was really happening during that time, despite the market, falling in love with zero rates.
Well, if you want to borrow, that's a great thing.
Sure.
And I think 35 odd trillion in government debt sort of speaks to that at this point in time, which personally kind of terrifies me. But very few people in the seat of power seem to care that much.
Yeah, and I have to admit, they don't seem to care a lot. And I would have thought a few trillion ago that it would have become a massive crisis already, but here we all are. We still have jobs. Unemployment is still low, and I feel like we've yet to see it really explode. And it makes you wonder how long, how much longer can this go on? I remember the big promotion that the old newsletter company I used to work for, Agora Financial, they ran in the 80s called The Plague of the Black Debt. I was like, man, you don't know the plague of the black debt. You don't,
you ain't seen nothing yet.
Nothing. I mean, so yeah.
And it is kind of interesting if you look at the 10-year notes across a number of different countries. Normally, we've seen a situation where the U.S. is sort of the leader and everybody is a spread above that.
Right.
Right now, we're the highest rate around, and maybe that's a warning sign out there. I mean, Australia and New Zealand have the same 10-year rate essentially that we do, as well as the UK, but everybody else is below that.
That
doesn't mean they're wonderful credits, but
I just saw, Frank, I'm sorry to interrupt,
there's a message.
But yeah, there is a message, I think. And I just saw on Twitter, some guy posted, he said, 10-year yield up 100 basis points since the Fed lowered 100 basis points. And that really,
exactly.
That seems like
September.
Yeah.
Yeah. Since the middle of September, as soon as they cut, I just was looking at that same thing today.
Yep.
With the yields going up again today as we're speaking. 100 basis points since
470. It's not the highest it's been in the last few years. It's 490-ish, but it's getting there.
Yep.
And it's up and up and up. And if you look at the yield curve, as us wonky bankers do, it's the short rates have dropped, yes, but the long rates have recognized that there's an inflation potential still out there, as well as this debt overhang. And you got to finance it. It's interesting. Obviously, Japan, since the mid 90s, has essentially had this gigantic debt overlay, and they've survived. But there's a breaking point, a tipping point, when people, I used to work with Hy Minsky, who you're probably pretty familiar with, the Minsky moment. And it's, everybody in the room, you and your wife, your partner, whatever, at a party, and everybody stays. One person leaves and the room empties.
Yeah.
That's the Minsky moment in the market. And that's what happened in 2008, when just all of a sudden all betas went to 1 on the downward side.
Yeah, that taught us a lot, didn't it? It taught us about, what is really a crisis hedge and what isn't.
Yeah.
and what will really protect you and what won't. Um,
What did
yeah,
you find was the best protection?
there's nothing beats cash. When
That's right.
everything, when absolutely everything is plummeting, cash is extremely difficult to beat. I mean, even gold took some hits, but eventually,
Hmm.
from the top in October '07 to the bottom in March '09, you wanted to own gold, but boy, it wasn't easy during that time. But if you had cash, you were ready for anything, and it was a good time to be ready for anything. I want to tell you, it was
Exactly.
one of the great buying moments of our lives, in early '09, especially late '08, early '09. So
It's interesting. Our colleague at EverBank, guy named Blake Wilson, had a saying around that time, which was, liquidity only matters when it's the only thing that matters.
right,
Uh,
yep,
and that's exactly what you're saying there,
yeah,
Dan. Cash is king at the right
right.
moment.
You're punished for it all the rest of the time in terms of returns.
Yep.
You're punished for it. But when it becomes like oxygen, and the oxygen is leaving the room, and you have it all, and you've got a nice big tank of it, then it's a different story. And the
Exactly.
only other thing, like I know people, including myself, who basically tail risk hedge. You say, look, I'm going to throw whatever 50 bips or 100 bips or something, whatever, however aggressive you want to be with it, at out of the money puts, leaps. Leap
Hmm.
puts 2 years out, and I'm going to forget about it, and it's insurance, and it won't pay 80% of the time, and then it'll amortize all that loss and then some, right, times 10 or 20 or whatever.
No,
So you
exactly.
could do that too, but that's people don't like to see that loss, year after year until it pays off. So cash, I can't beat it. It's hard to beat.
That makes
Yeah,
sense.
the managed futures guys can do okay at those times, um,
Sure.
but that's that's an
Still
active.
got to be on the right side of the trade,
Exactly
and the
that.
right side of which sector?
Right, right. So it's not about an asset, right? It's you got to be good, and you got to be right. So if you don't want to
Hmm.
have to be right, it's cash or it's nothing, as far as I can tell. It
Yep.
sure is gold. I mean, God.
Yeah, gold's not bad, and it does, it's still
Yep.
there. Yeah, you have good returns, and last year was a wonderful year for gold for
Absolutely.
good
Yeah.
reasons.
Absolutely.
But but monetizing that, selling it sometimes is hard to do. We all kind of want to hang on to that with our grimy little hands,
Yep.
and not get rid of it. But cash and hard assets of whatever it is. We had a client at Mark Twain years ago
Mhm.
that was a timber guy, and he
Oh.
had stacks of timber piled up all over the world. Uh, Now, we did occasionally remind him that if he had to happen to show up in Indonesia and wanted his timber, he might be shot in a bad situation. But
Yeah.
he felt that this was his store of value.
Right.
But hey, he was a timber guy.
Yep. Timber is interesting because the idea of Mother Nature doing the compounding on the stump is
Hmm.
is not something you get with a pile of copper or gold or something. So it's interesting.
That's
Yeah.
right.
All right. I want to talk about banking in general, and then what you're doing at Battle Bank now. Maybe what was it? What was happening in the world when you started EverBank? What
Hmm.
was happening in the world that Frank Trotter said, "This is my moment. I need to do this now." Why start EverBank when you did?
Well, if you look back, we started putting the bank together in 1998
Hmm.
and launched it essentially at the beginning of 2000. And actually, very much like today, the big banks were paying very little on deposits. That's part one. We launched with a 601 checking account. At the time, big banks were paying nothing. And guess what? Big banks are also paying nothing today.
Yep.
They were charging high fees. We felt we could reduce our costs by being direct to consumer and not building branches, something that turned out to be absolutely correct. In the service levels, this was kind of in an era when people still went to the teller line. We launched 8 years before the iPhone. Is kind of a way to put a mark on it. And people weren't that used to being online. It pretty much was all desktop or laptop. Um, but service levels at the banks with branches, there are lines out the door.
Yeah.
If you had to do a transaction, you had to get something done. And they were just not willing on average to support that. And of course, we like access to the global markets. So we also launched with our foreign currency deposits, our precious metals dealing, and some other things that spoke to our client base. And we had the experience from guys like David Galland, our initial director of marketing, Robbie Forger, had been in a similar business before. And Vinny Amato, of course, is co-founder of EverBank and of BattleBank. On the operations side, everybody knew how to deal remotely and manage that type of workforce. And so we really looked out at the market and thought, well, people are not getting value. They're not getting service. They're being charged high fees. Maybe there's a slot for us to slide into. As it turned out, over the next 17 years, there was. I think, as you know, Dan and Corey, that we ended up running the bank. It ran up to about 28 billion in total assets, and then sold to TIAA in June of 2017. And it was a great run. We had help with the currency markets in the early 2000s. We had a lot of help with the precious metals markets in the interim, and of course, we were a big mortgage lender throughout that period as rates dropped, which was a great business to be in at the time. So all those things sort of combined, we saw an opportunity. We felt we were early to the game in direct banking, remote banking, not having branches. And it worked out. We were very pleased with the result.
I bet you were.
Yeah.
What was the move in assets from start at the finish? You said it was 28 when you sold. What did you start with?
Zero.
Okay.
And it's funny, we did. If you've been in the business a long time, I think you started in 2000, if I vaguely recall. We did our first direct mail piece in the fall of 1999. It was literally direct mail. It was a beautiful piece, explained everything. We got exactly 0 clients. But then we figured the online marketing out, and of course hooked up with your old shop at Agora, and were able to introduce it to people who wanted to listen. But it was pretty funny, starting at 0 and still having 0 after our first marketing plan pitch. But
right.
Yeah, we came back in and were able to introduce it to a lot of people who loved it.
Yeah. Frank, one of the tidbits that I most frequently reel off about banking is that you get to a certain level of assets and you need, another billion or two to pay for it, is what you had told me once upon a time.
Yeah.
And I was wondering what is and so therefore, it just creates the regulations, in other words, create a kind of a competitive advantage. Once you get over that, you get past that hurdle, right? You can pay for it, and maybe your smaller competitors can't pay for it as well. And that's one of the many ways. This is a typical thing in regulation, right? The biggest incumbents, of course, love regulation because it limits their competition. And you see this in lots of industries. And from the inside out, like I can research it online and find out, but you're in the business, you've been in it for decades. From the inside out, what does that look like right now? Is it worse? Is banking, I know things like, for example, Glass-Steagall has gone away. I don't know how that impacts your side of things, but you mentioned that there were more regulations now than there were, in the distant past. What does that look like? I mean, you've got a new bank. You've got BattleBank now that you're trying to grow. I just want to know what the regulatory situation looks like to you now in terms of, competing and dealing with regulations.
It's a great question, Dan. And I think a lot of the regulations are what we were doing at EverBank before. And then finally the market was kind of forced into this. And, we tend to view that, the markets do a pretty good job of doing this.
Right.
But, regulation is what it is. Right. It's a lot more communication with your regulators. We found our colleagues at the OCC, for example, to be incredibly professional, well-informed, and good partners. If you're going to have regulators, that's what you want. The process has elongated massively. As I mentioned, way back at Mark Twain, we would start something and then all of a sudden, just ring them up later and say, this is what we're doing.
Oh, by the way,
now there's a different process. I remember when we launched eCash in the 1990s. I got a call the next morning from the president of the St. Louis Fed with basically a WTF question. What are you guys doing? And we had a nice drive downtown to chat with them, but we left and everybody was happy. But that was kind of nowadays you propose things and they do what's called a non-objection letter. So we want to lend to the Dan and Corey types. Okay, and you send them a letter and they say, okay, that sounds okay. You say we'd like to lend to Russian oligarchs, and they'll send them a letter and they'll say, no, let's not do that. So there is a restriction on that. Mm-hmm. Is it positive for banks? Great question. I tend to think that the market takes care of that better. But again, we have regulators and that's what we deal with.
Right.
But it's a lot more now than it used to be. There's no question.
I got a question about starting in 1999. I mean, to me, the two big things stand out there, the dot-com bust and 2007, 8, 9. How did you guys survive those periods? You said you were involved in a lot of mortgages leading up to, the financial
mm-hmm.
crisis. So,
well, it's interesting. The way we did business worked out very well. And I'll credit our credit folks, our risk management folks who were super at doing that. I believe, the statistic may be off by a little bit, but we were probably initiating about 20 billion in mortgages a year and servicing, 70, 80 billion dollars of mortgages at that point in time. And I would hope to say that this was by our risk and credit teams' hard work, but we got through all that very well. We did not take TARP. We did apply because it was politically correct to do so. I think our OCC, or at that time OTS, regulators might not have, they might have called us 10 times a day until we applied. And when you sort of put that together with regulation, if you took TARP, there was a number of restrictions that were placed on you. And what we talked about when we were rejecting TARP was that we expected that the big banks who are now handcuffed by these new regulations would make sure everybody else had to abide by them. And sure enough, those changed over the next couple of years. But that was a tough period. And it's one of those things where, particularly in terms of land, and we had very little of this on our books. You have a development property, all of a sudden becomes worth nothing. It might have been worth $5 a foot, 2 years ago. It's now worth zero because there are no buyers. And it sort of felt a little bit like 1981 to me for a little while. It was just from a different perspective. Wow. But coming out of that, it just by our asset team, our credit team, and others were able to purchase high quality assets from other people who were scrambling to get out of them. Back to what Dan said, cash. Some of these big institutions needed cash, and they were selling unbelievably good stuff at big discounts. And our team was able to go in and buy those, and we profited very well, and ultimately purchased a failed bank in Florida under the FDIC assistance program. And that worked out great as well. So by luck, hard work, and great work by our credit folks and risk folks, we worked through that very well. And back to the 1999, we were raising capital at the time. That was not fun. So as everybody all of a sudden had, 40%, 50% less money, we had to beg a little longer to get that thing done.
Gotcha.
Right. But it sure is good to be the one. It sure is good to be the one that doesn't need, TARP, doesn't need a bailout when things are going wrong, isn't it? I mean, I cannot understate and I can't overstate enough how many times in just analyzing equities and meeting people in all kinds of different industries, mining, just anything, how that has been not only a part of their strategy, but the part of their strategy that made them, being safe, not being too levered up, having the capital, having access to capital when other people didn't, whether it's cash on the balance sheet or whatever it is. you can't say you can't say enough good things about that. So I imagine you're running Battle the same way.
We're planning to, and of course, with Rick on board, we have two people at the sort of the top of the heap that kind of like cash and resource availability. And so that's our viewpoint: is we're going to be conservative. We're going to lend money to markets we understand. We're going to lend money to markets where we feel we're going to get the money back. These are basics, but not get too far afield. We have a lot of different clients we expect to serve. A lot of our clients are entrepreneurs and have interesting businesses and will ask us for loans, and we'll accommodate some of those. But we're not going to go chasing every deal just because it's out there. And sometimes the local bank might be the better place to do it. But in a lot of the ways we think about things is we're not going to try to race out there, put all the money out the door day one. Let's walk into this. We have some great lending products. I think you're probably aware we'll be lending against precious metals holdings. From a banker perspective, what could be better? 24 hours a day.
But not all bankers think that.
I understand.
I mean, right?
I mean, if you walk to your local bank, they'd probably say, "Sure, we'll put the gold in the safe and lend you some money," but there's no mechanized way to do it, and that's our delight, frankly. And 24 hours a day, 365 or 6 days a year, I can sell that in 15 seconds, if need be. And I don't expect to have to, and it allows people, as I said earlier, we like to hold on to our gold and silver with our sticky little hands. And this gives people an ability to do that deal, that leverage, that really cash, as opposed to selling their precious metals, which they view as a bedrock of their portfolio. They want to put a deck on the back of the house. They want to buy a property. They want to do a deal, or if the crash comes, they might want to load up on equities at pennies on the dollar. It's up to them, but this gives them the opportunity to have that liquidity and maintain their bedrock, which I think is important.
That is very cool, very important. I remember talking to Rick Rule one time, and this was not too long ago, within the past year or so, and we were talking about how politics and environmentalism has affected industries like extractive industries, natural resources, oil and gas, and that some institutions are actually shying away from lending these people money and giving them capital. Does that kind of thinking inform the kind of lending that you'll be doing at Battle Bank?
I love that. When people leave a market, or whole groups of people leave a market, that's an opportunity. And we can debate energy and planet temperature and everything else, but I think we've got a good 100 years of carbon-based power coming. We got almost 3 billion people today that don't have power, and it's going to take if we do it all renewably, more power to us. It's less junk in the air, no matter how you look at it. But we'll take a look at a lot of those things. We will have people on staff that understand that. Some of it's pretty basic, but obviously with Rick on board, we have a huge resource to get us started.
He knows what that collateral is worth.
Yep, exactly. And when you talk about who's has the opportunity, we can do deals where we know 2 or 3 other people want that well, or that mine, or that whatever. And that makes it a different trade than the old definition of a mine, which is a hole in the ground with a liar standing at the top. We get some high quality stuff, be able to make a loan against it, and also have a takeout if that need be.
He's been involved in lending to them and in reinsuring them, so he knows them inside and out.
But I think there's some real opportunities there. There's a variety of different verticals where people have abandoned the market for a couple of reasons. Sometimes it's that ESG thing. It's up to them. It's their business. I don't care what they do. But sometimes it's too small for them. I mean, we kind of joke that we can't compete with JP Morgan Chase, and they can't compete with us. They've got to have a book of business in any particular vertical. It's going to be, double or triple digits larger than our entire balance sheet. And so we love to go into stuff that can be secured, has a good yield on it, and serves a purpose. And that's where we're looking to put money out the door and also to get it back.
Will Battle be completely virtual? Will there be branches, physical branches?
Well, as you may know, we've entered into a contract to purchase a small bank as part of this process. And so we will have that operation, but our primary focus will be on the national direct-to-consumer branchless market. Our headquarters is down here at the base of the hill here in Edwards, Colorado, right around the corner from Battle Mountain. And it's a 12 by 12 office. I've got one of my old dining room tables in it, and 2 folding chairs. So that's HQ, and I haven't been in the office for a couple of months, but I'll probably stop by later.
Yeah, no.
Overhead, as Rick will keep saying, a regular branch costs, 125, 150 basis points to run. And, if you're selling a lot of high markup products, you're not paying people on their deposits. If you're charging fees, that works. We kind of like to give the money back to the clients and provide them with service by phone, chat, email that's coming from people that know what the hell they're talking about. It's not a call center where you got somebody fresh out of college reading off a script. It's somebody that might have worked in Manhattan as a branch manager for 20 years and got tired of a 1 hour each way commute up from Long Island. This is how we like to do it. It's so much better for the client, and we think it's better for us.
So besides loans, is there any other type of product that you're excited about besides, outside of lending?
Well, in this market, of course, the precious metals dealing is going to be great. We've done that since the middle 80s in Mark Twain banks and EverBank, and now we'll be doing it in Battle Bank. And again, that's, as you mentioned, that's kind of a unique thing for banks to do. There are a couple that trade in it, but it's kind of a side or sidecar business. Right. You'll be able to buy or sell or either allocated or unallocated metals. And if you want them delivered to the house, great. If you want us to hold on to them, we're happy to do that. And as I mentioned, the lending program will not only be to the direct Battle Bank clients, but we're partnering with a number of the big dealers to provide liquidity at that side. The foreign currency deposits, currency has been pretty flat since I left EverBank in 2017. The euro, I think, was 108 when I left. It's 103 this morning, and headed in the wrong direction. But people like to diversify their portfolios, and of course, we'll be doing market index deposits. Maybe you and Corey have an idea of a market you're kind of interested in, but you're not 100%. I think this is going to be really good, but there's a big downside to it. So what we'll do is we'll create a deposit that has 100% principal protection, but a percentage on the gain of that index. We've done stuff in our past as simple as the S&P. Your former colleague, Steve Sugarud, did one on Japanese REITs. And we've done a lot of commodities and precious metals and currencies and other things along the way. So it's really something that's a great thing for a retirement account, of course, with the 100% principal return. But you get the upside. If you had a gold one over the last year, obviously you might not have gotten 27%, but you might have gotten 15% and 100% guarantee. So that's not so bad. But that simple stuff like actually paying people on a checking account. Haven't done a survey in the last week or so, but it's probably 380 today for checking. Emphasize the word checking, not savings, not money market, checking. And I think the average right now in the country is about 0.02. Every once in a while, I'll survey JP Morgan and Wells Fargo and those guys, and it never changes. And JP, I think, charges $25 a month if you keep less than 20 grand in the bank. I don't know if you want to walk into the bank and hand a teller $25 a month, but not something I want to do. So just putting all these different things together, and we have really one other thing that's super exciting that's new for us is really truly self-directed retirement accounts. Now, I think most people think about that as going to Schwab or Fidelity and building a 60-40 portfolio. But as you know, there are a lot of other eligible assets. Maybe it's multifamily housing. Maybe it's hard money loans. Maybe it's crypto, whatever. You'll be able to open a retirement account and much cheaper than some of those big trust companies that charge a lot of money to have you do this. And we'll help you set that up and propel you into doing your own investing for those things that are legal, which in IRS terms are not ineligible.
Right.
It's nice double negative in the regulation. Yeah. But as long as the asset's eligible, you can do it, and we're going to give you a platform for that. So we're really kind of speaking to that independent investor, that self-directed investor who may have a 60-40 portfolio out there somewhere, but they've also got a big chunk of money in things that they are interested in. They're listening to folks like yourselves and adding on to that sort of passively managed portfolio in a way that they find is better for their long-term success.
Well, Frank, you mentioned crypto before I did, and I was getting there. There's no way we can talk to talk to anybody about banking these days without talking about crypto, and especially Bitcoin. Sure. And so I can put, if I'm a BattleBank customer, I can put crypto. It sounds like in my account, my 401k or what?
IRA account. Yeah. If we actually offered crypto custody or anything in our applications, we would not ever open.
Okay.
As you know, the regulatory environment is there. But if somebody in a self-directed IRA wants to open an account, so be it. That's up to them.
I see.
It's an eligible asset. I don't know if you remember, but we led the introduction of eCash in the early 1990s, which was really the first direct online, irrevocable, instantaneous peer-to-peer payment system. And it was way too early. It was 15 years too early. So it sort of died a slow death. But it was a brilliant system and really, it should have been the one that won instead of Venmo and PayPal, but it didn't. And a lot of the same folks, I used to sort of traffic in the cypherpunk world, probably are the ones that developed Bitcoin. Of course, we don't really know who did that. Yeah. And I think this completely independent currency is pretty interesting. There are technical issues that probably prevent it from being the reserve currency of the world at this point. If I get the numbers right, I think you can only do 6 transactions per millisecond, and you can't run a global economy on that. But maybe the next generation of crypto and block will allow you to do that. I don't know, but I know a lot of the coders are working feverishly behind the scenes to see if they can make that work. But it's interesting. In an independent currency, it's a little too volatile to be a reserve currency yet.
A little.
But maybe by how many standard deviations. But yeah, it's fascinating. It's interesting. More power to them.
Absolutely, more power to them. I completely agree. Competition in money is essential, and we don't.
It's correct.
We haven't had it. So it's good. I'm glad to see them doing it, but at the same time, it's already been sort of financialized and brought in to the mainstream through ETFs and futures and these things. And I'm like, well, that kind of those things seem great because they give more people access to it, but they sort of negate the whole point of it, to me, which is to be outside the financial system. So it's like, are these things, are ETFs and futures that great? I don't really know if they are in Bitcoin.
It's going to be an interesting question. I think because it's nice, it should eventually settle in at some arbitrage price.
Right. We're all waiting for that.
Nowhere near now. And it's that arbitrage price should be the lowest cost of mining, because every tick above that, miners should just jump in and mine until it goes down, and everything below that they should shut down. But we're nowhere near that at this point in time. And maybe that extra volume where the street comes flying in with huge trades might be moving in that direction, but that's years off as far as I can see.
But George Gilder, who we spoke to on the show a while back, had an interesting comment about this. He said one of the problems with Bitcoin, the reason it's so volatile, is because the supply is restricted the way it is. In other words,
Yeah.
gold can grow as a currency. Gold can grow with an economy because the economy grows. There's more capital for bringing it out of the ground, et cetera. But Bitcoin is it's very strict, and considering how much is just sort of held, it's almost like it reminds me of these closely held stocks where it could be $1 billion company and somebody owns 90% of it. So it's really like $100 million,
trading, float.
Right.
Yeah. So well, I think that's a big issue. I agree with you, Dan. And down the road, is that the right way to do it? I think we've now had almost 20 years of experience with it. Mm-hmm. Maybe the next generation, as I said, will have something a little different that is better for the overall market.
Right. As a matter of fact, if I'm not mistaken, I think to the day we are coming up on the 15-year anniversary. I thought it got started in January 2009. I could be wrong about that. The first.
I could be.
Let me just Google while we're sitting here. First Bitcoin trade. January 2009. So I don't have the exact date though, but 3rd of January 2009, the Bitcoin network came into existence. All right, so we are just a few days past that anniversary date. So it's a little younger than gold and silver.
So, slightly. Yeah. We'll see if it plays out.
Right.
Still a teenager, but it is fascinating. To your point, Dan, and Frank, about like it wasn't created to be part of. I don't think it was created to be part of ETFs. I don't think this is what whoever Satoshi Nakamoto had in mind when he created this thing way back in the day. But it's still it found its way into, or the system found its way to bear hug it a bit. It seems like.
Yeah. Exactly.
Yep. I mean, let's face it. Politics sort of, it corrupts everything. It touches everything. But I'm just looking at the abstract. It says, a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution, which is exactly what you're doing when you're buying ETFs and futures. So, we'll see.
And that's actually what eCash did. I think it kind of combines the two without the public block. eCash didn't have a public block; it had a mint. We were a mint at Mark Twain Banks. We were proposing that ultimately that the Fed be a mint for all the banks. Mm-hmm. But it was a peer-to-peer payment. I would send you, Dan, $500 or 6,000 euros, whatever it was, and instantly you collected that in your wallet. But if you could kind of merge those two, and it had an anonymity feature that was pretty spiffy. Mm-hmm. David Chaum held the patent on it for many years. But between the two of them, I mean, there's already sniffers out there that can pretty well tell who's doing trades in block. Mm-hmm. So you kind of combine these two. And again, I don't know what the next generation is going to bring. Otherwise, we'd all be rich figuring that out. Mm-hmm. But that, combine a little bit of those characteristics, add a little more liquidity, faster transaction process, and now you got something that could work.
Yeah, I almost hate to say, I do hate to say it, but right at this moment, my Visa card works great, and my writing checks works okay for me. When I pay the folks who clean up the yard or whatever, and I
Venmo.
Yeah, Venmo. Those guys live on Venmo, right? Their whole business is on Venmo, and the current system, it works for me. It works great, in fact.
Yeah, well, it does. And it does for most of us. If you look at the numbers about, first of all, checks look like it's a downhill skier.
Sure.
Run. It's getting to be less and less. And, ACH and other direct payments that we all create are mm-hmm. skyrocketing, and credit cards are taking over.
Right.
Whether that's through Apple or Google Pay or directly.
Okay. I'm glad you brought this up. Now, when you cite those things, ACH, credit cards and those things, one word comes to mind, that continues to sort of baffle me, and I still continue to scratch my head, and that word is settlement, right?
Mm-hmm.
It still seems to take like eons, in modern terms, it's eons to settle these things, days, right?
Yeah. So it typically takes a couple days to do an ACH. There's
Right.
sort of a file that goes out day one that says, hey, does Dan have the money?
Mm-hmm.
And the bank replies, yep, Dan's got the money. And then the next day it moves. And I think the protocols are coming closer. I think it's down to 1 day mostly. And now it should be pretty close to real time.
Right. And you're credited
short.
usually credited instantly, just about.
Yeah.
Anyway.
which is an interesting, there's a couple Wall Street Journal articles recently about some of the fraud that goes on, mostly with paper checks, but a little bit with ACH as well. Because if you actually give somebody a paper check, you've got your routing number and your account number at the bottom of that. Thank you very much if I'm a crook.
That's right.
Yeah. And so, there's stuff you can do with that. And the banks have to watch for it. There's these fascinating questions about whether or not we're actually responsible if you screw up. But, we tend to be, unfortunately. So, we get hang out to dry a number of times because somebody was, the grandmother forgot their grandson was a full-time hacker and all of a sudden drained her account. Grandmother comes looking to us and we're like, wait a minute, you gave him the password. But that's kind of how the business works, and it's part of life.
All right. So I guess ultimately, though, my question would be, shouldn't settlement already? I know you're saying it's getting faster and it's getting there, and I'm crediting, but you agree that it should be faster by now, and
should be instant.
Yeah.
There's no reason for. Wires are the only thing that you want to do for commercial transactions, which is irrevocable and formal.
Right.
But everything else should be instant settlement, like a Venmo. They're really running a book inside that, and they're taking the float on one side and giving it away on the other. It's kind of like a little bank. You may recall the original managing director of Venmo was a gentleman that is now running a company called X and Tesla. They started the X Bank way back when, and it shut down pretty quickly. But I think they're going to go back to that. It'd probably be interesting. He's always had this vision that they're going to be a bank. So maybe he combines Twitter /X and the old Venmo to PayPal is really what he was running at the time.
Mm-hmm.
But put those together and make a bank out of it. It'd be interesting, and that gets you to 0-day settlement.
All right. Well, come on, Elon. TikTok, buddy. We're waiting for you to.
Yeah.
We're waiting for him. He's got other things to fix, but
tell me about it.
A couple other things at the moment as well.
That's right.
Yeah.
Actually, now that we have brought Elon into the conversation, just for giggles, do you think this DOGE organization will do anything good?
It's hard to predict. I'd love for them to do it. They're not taking the Argentine way, as your former colleague Bill Bonner mentioned in his letter this morning. He just said, "Okay, that department's gone."
Yep. Afuera.
And said, "I'm not going to sign any.
Yeah.
I'm not going to sign any budget that has a deficit."
Yep.
End of discussion.
Right.
So it'll be interesting. Obviously the Reagan team sort of ran into Stockton, and everybody ran into trouble after 6 or 8 months. And sort of looking at even the continuation bill, all 1,500 pages of it,
mm-hmm.
it's not like things have changed a lot. And that was a Republican, Congress that put that up there. And there's some good backbenchers that are trying to push that away. Yeah. But I'm hopeful that something happens. But we'll see it. It's all proof in the pudding.
Right. I've looked at it just in the sort of large numbers, and I if you look at what was spent in fiscal 2024, I can't figure out where in the world he says he can cut $2 trillion from, because you're not going to cut any of the mandatory stuff. That's 60% of it, and you're not going to cut defense. And I don't, and there's not $1 trillion left after you get through all the mandatory and all the transfer payments that no politician would agree to cut, and defense, you're left with not very much, and it's certainly not 2 trillion.
No, that's right.
So,
well, I think there's the political sales pitch, and then there's the reality.
Right.
And again, I'm wishing well.
Right. It's worth hoping. Yes.
I don't have I've heard a lot of pitches over the years, being around for a long damn time, and some of them come true.
Yeah. It's hard to save money if you're talking about buying Greenland, though.
Yeah, and of course increasing the military, which is this traditional Republican stronghold. So,
yeah,
and maybe they get rid of the F-35. Great, that may make sense, but that's just one thing. Still got a lot of $5,000 toilet seats to pay for.
Yeah. All right. Well, I don't necessarily want to go down that rabbit hole too far.
No, we don't. We're not going to go down a political path too far.
Greenland purchase, Stan? You don't want to?
Yeah, no.
I don't know. Yeah. I don't know enough about it. They go, great. We get some more oil and gas, and that's a wonderful thing.
All right. In fact, we've actually been going at it a while here. Let's do our final question and see what you do with that. It's the same question for every guest, no matter what the topic, even if it's a non-financial topic. It's the identical question. And if you've said the answer already, feel free to repeat it. And the question is simple. Really, I just want you to provide our readers with a takeaway. So the question is, if you could leave our readers with a single thought today, what would it be?
Well, I think it's really spend time looking at all aspects of your financial life. We sort of forget about many pieces of it. Obviously, we're in banking, and there's trillions of dollars in the big banks, and they shouldn't be. Anybody rationally would move it out. I'll bet I have 2 people on there with a big bank account. But also look at all the different aspects of your life. In your personal life, we can cover that. That's what you really should focus on every day, all day. But we forget about aspects. We spend all this time looking at portfolio. We spend all this time looking at individual stocks we might want to buy. What's going on in your debt life? Should you be paying that mortgage down or borrowing more? Should you be looking at all the different accounts you have and assessing whether they're a good thing or a bad thing? And ultimately, it's, where do you want to be a few years down the road? Is it getting out of the city like we have up here in the mountains, or is it, and how are you going to get there? What's your pathway? Do a little bit of planning that all the businesses do every year, but do it, for yourself. Your family, a friend used to say, I worked for, his name was Jack Stapleton Inc. And then I worked for EverBank at the time. So you work for your family and yourself, and you happen to do it through MarketWise or other. But what are you planning for the family business? How are you going to move that forward, and how are you going to? You're never going to optimize. There's no such thing in the real world. But how are you going to make it just a little bit better? Save a few bucks here, or make a few extra bucks there, and do it without having to spend all day thinking about it. So that's my thought.
All right, excellent. Yeah, wise words.
Love it.
Frank, it's been a pleasure to talk with you. It's always a pleasure to talk with you when I see you around at conferences and things over the years. And thanks for being with us and talking with us today.
Looking forward to catching up with you again, Dan and Corey. Great to see you. And as we say around Battle, it's always onward and upward.
All right. Sounds good. Thanks a lot, Frank.
Thanks, guys.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.